All right, stock market, 1 to 3 month. We're going to look at the SPY. I left QQQ on here, but I'm actually not going to share the QQQ. Oh, maybe I will. Maybe I'll just put it on there for you to see. So let's take a look here at the SPY. I'm going to move from this to SPY. And look right over here at these cycle patterns in here. I did a little lesson, and I'm going to expand on the lesson in this like I did last week. So again, this is cycle analysis. What I want you to see is the rising phases that have been in here for all this period of time. These are the rising minor cycles right in here. As you could see, there's about 3 of them in each of these dominant patterns that you see right there. So let's take a little closer look so you can see right in here at these last cycles, and you'll get a great idea of where we are. So this is the minor cycle right there. Right there and right there. There are 3 of them here as illustrated on the bottom. This is the basic look at the cycle. If they were moving sideways, well, then each of these cycles would be up and down to the same levels. However, there was an uptrend in here, and this establishes the uptrend, as you can see, as each of these cycles is illustrated just as it occurred in the uptrend, all of them making higher highs, all of them having higher troughs, and then a higher high made in here. Now, if you're a subscriber of ours and you look at the daily chart, there's actually 3 of the minor cycles right in here that you see that show up on the daily chart. And so each of these cycles right up over here made up of 3 cycles right in here, as you can see. Where are we right now? Well, this cycle took out this bottom, and that says that this whole period in here is likely to decline. And it says that rallies in here are likely to fail. You can see what happened right in there is, well, that was up, S&P 500 was up 4% for the week, is now up more like 1.5%. And this area here is where all of the cycles do line up together, and it gives you this yellow period of risk. So this decline right over here, which was 12%, is very likely to be taken out down over here. We're looking at this being a 12% correction and potentially 15% correction here. Big support at the major 23.6%. That's at about 411 on the SPY. And in here we have these 1, 2, and 3 cycles right there that comes out into sometime around the mid-March or early April period. And this should bring you, well, the decline we're in right now, another attempted rally, then a bigger decline down over here, and another attempted rally, and a bigger decline right there. There you can see the way this sets up, and each of these were positive cycles, and once this made a lower bottom here, it turned the trend down, and now we're looking at this right over here. This cycle right here made up of the 3 moves right there, and this is very basic cycle analysis lesson that I'm showing you. It makes the highest probability that the stock market will continue down into mid-March to early April, as we show you right in here. These 2 vertical dotted blue lines are the time frame, the time zone for when this declining phase should end, and then getting back up to this right over here. If you remember earlier in the show when I talked about the bond market and gave that great lesson on yields, I said that sometime in probably in the spring there would be a rebound in the Treasury market, and I thought that that would coincide with a rebound in the stock market. Well, this is probably that period there, but then it's going to get into more risky periods out over here. So lots of people that say to me, well, the stock market is about to blast through the highs. Well, anything could happen, and I could be wrong, and I would have to reanalyze it if that happened. But right now, the highest probability is that rallies will fail and the stock market will move down in a significant way. So this is the 1, 2, 3 moves that I'm talking about here in the daily chart. If I switch over to the daily chart right there, you can see in here, that's the setup right in there that we're looking at. This rally came, hit the sell zone, actually left an abandoned baby, Here is the 1, 2, and 3 moves that we're talking about that I showed you on that weekly chart, and that is likely to bring, well, some more weakness out over here for maybe a couple days, an attempted rally, and then bigger declines coming out over here into that period into March. So that's the look at the daily chart on the SPY. Here's a look at that weekly chart, and those 3 moves I just showed you down over here, likely to bring you lower prices. I would say reasonable to be down 13.5% to 16% by the time this is over with on the downside. And I told you I would share the QQQ, so I'll put that up right over here. I need to get the QQQ weekly. I'm sorry, I don't have it on QQQ. I have it on NDX. So lots of people ask about that, but I have it on NDX, and you can see in here the same pattern on NDX, and the likelihood that that this failure that we saw right over here is the kind of action that we're going to see as it got into the sell zone. And again, our target down over here under 13,000, that's 12,900 at that major 38.2%. So I had put up on this slide that I was going to show the Nasdaq, and I forgot to change the slide, so I decided to bring that up. So let's look at the stock market. Choppy, wide swings, the biggest volatility that maybe we have ever seen on point movements, of course, coming off all-time highs, and the likelihood that the stock market will continue to the downside into the mid-March to early April timeframe is where that sets up right now.